Good afternoon. This is Chris Brecher with Brecher Trading. My son's birthday, my son and my daughter were born on the 21st. They're expiration babies. So it's pretty funny that I just was predestined in here. But today, February 21st, inaction by the Fed leads to a bond market rout. What do I mean by that? Well, the Fed comes out and says, well, inflation might be bad, but we don't really see it. And that caused the bonds to sell off, which caused the ESs to sell off. Really exciting. Right at the top, I said this is the dumbest rally I've ever seen. If I had a 401k that I could just get out of this second, I'd get out, and the market reversed 500 points. So really cool that that happened and that I got on the live chat early so I could tell everybody how I felt. So let's go into the overall market, how I saw it unfold, and what I think happens next. So the first things first is to go into FinViz. Now, I want you to realize in here that when I talk about anything rolling over, it's on a closing basis. That's why it gets tough, because you could get killed in the meantime, and you need to be there intraday to see these things happen. So first things first, go in here on the chart. You're going to see a lot of reversal candles in here. Nice little reversal wicks in here. This is where everybody got hurt. Everybody thought the NASDAQ had broken up. The Russell had broken up. DJIA and the S&P hadn't gotten to a new wick high, but they did. Those reversals set in motion a nasty reversal. Now what you have is this. You have the Nikkei, nasty reversal. DAX closes on its low, and so on. The key is always the follow-through day, but I'm going to show you some things of why I think that we could follow through. First things first, look at this. What the heck is the Fed talking about in their Fed meetings? Soybean meal, canola, wheat, rice, soybeans, cotton. I mean, my goodness, lumber is $526. It's gone up $126 since December. There's no inflation. I mean, what are they thinking? So what happens? The 10-year bond gets tattooed in here. But it's always about the point of no return. So I want to show you what I mean by that. This is the market today. Here we go again of, it's like here's your brain and here's your brain on drugs, with the scrambled eggs. What I mean by the point of no return is this, and I'm going to go through a number of charts to show you what I'm talking about. Here's the ESs. I'm going to make this a nice big chart so you can see it in here. The ESs, like I said, look like they turned down, and then they had the follow-through day yesterday. The problem is it's never that easy, is it? The second is that we were rallying all day on the left, going nuts. I got on the chat right there and said, this is the dumbest rally I've ever seen. But I saw this, the ES on an hourly, and then you see the NASDAQ on the right in an hourly, and you're like, they look like bull flags. And it looks like the NASDAQ is breaking out on a bull flag, but there's always something more. What do I mean by this? Go and zoom this out. And a lot of people said, well, if that breaks out like last week, then this is going to break out. The problem is there was one thing everybody forgot in here, and that's the bonds. There's always a point of no return. And what I mean by point of no return, somebody asked me when the bonds were down 9 what I thought of the bonds. I said, I think they're going down. That was right here. If the bonds are down like 9, the market was just going to keep going up. But there's a certain point where these get blasted so far that the entire markets have to notice. What was the first tip-off that was going to happen? The housing stocks and the consumer discretionary. The same things that have affected it before. So look what happened on a 5-minute chart as the bonds started to go down. I'm going to show you 3 charts on here because even though it's hard to fit them on here, I think it's very important. We're going to put the bonds on the left, the ES is in the middle, and we're going to put some of the consumer discretionary stocks on the right. I put Best Buy in there. I think Best Buy is important. We're going to put them all on 5-minute charts. This is what I wanted you to see because I think this is a big deal. This is the bonds starting to sell off on the left. As you see, they were going down at 13 and the markets didn't seem to care. But look when Best Buy started going down. It started going down on the opening had a little blip up to about 1 o'clock and 2 o'clock and started selling off already. Go and look on the right and look at Lennar, housing stock. Already it started selling off in here, and it sold off before the ES is sold off in here. What else went down? Tiffany. These all went down. Now, it looks like they went down the same time. I'm talking about this. See this move? This was when it was up 31, and right here it was still up 21. I'm talking about this little blip right here between 2 and 3 o'clock. That's when this fell apart. That's what I'm talking about. That this only went down this much, but Best Buy went down this much. Lennar went down this much. This is before everything cracked at 3 o'clock. These were already cracking. That's my point in here. This started selling off in earnest at 3 o'clock. These were already on their low. I was actually talking with my wife before all this happened, and I said, this is the dumbest thing. I got on the chat and said it. This is the dumbest rally I've ever seen because bonds are going up. People are less likely to buy houses. They're less likely to buy high purchased items. I have no idea why the whole market's going up, except everybody thinks that high interest rates don't affect Google and Amazon, and that's pulling up the NASDAQ, which is pulling up everything else. When that started to unwind today, that's when everything went down. So just keep that in mind. What do I think now? I think you got to respect this big old red candle. You know what I think of red candles? And I think this. I'm going to go put it on 2 charts. And then I want to show you some intraday things that happened that were real exciting. First things first, bonds, 1-day chart. As you see in plummet mode, where's the support in bonds? Obviously, this is what everybody's worried about. Weekly and bonds on a daily. And what's scaring a lot of people is that the bonds worked off their daily oversold by going to a new low. That is frightening. If this is true, these bonds could go all the way down. Well, I showed this on my 2018 crazy ideas, but bonds theoretically, look at all the little bumps in here. There, where it is. The next one's here. But where's the real support? Well, we're way past that. And we're at this one, sort of. And under that, you're talking about 130. If these go down another, that's like long-term bonds going up a percentage point. That's going to destroy the housing market. Just keep that in mind. So just keep this in mind, what this could imply. How about on the overall market? ESs. Go and put it on a weekly, which if we stay right here the next 2 days, this is going to turn up because it updates at the end of the week. Go and put this on a daily chart now. Look, and then go and put this on an hourly chart on the right. What do I think? I think we're going to bounce tomorrow just to work off the oversold, and then it depends on what the oversold looks like. I didn't know it sold off that much on the close. The key is this. Are we going to get back above 27.10 when you work off the oversold condition? I think on the left, this becomes a big deal. That we couldn't take back 27.50. You wonder if the next stop is 26.50 in here. But I want to see how it works off the hourly oversold. That's going to be the key tomorrow. Look at the NQ. Nice reversal candle. Sorry, I just hit the mic. I get excited in here. Sorry. Nice reversal candle in here. Oversold. Same thing. Are we going to work this off in a weak way? Or are we going to be like the last time we got oversold and we rallied 100 points? It's going to matter of how it works it off. To give you, for instance, of how things can work off an oversold in a bad way, this is Apple just on a 1-minute chart. We were trading it today. A lot of people did great in Apple. This is what happened. When Apple was right here and started selling off, I got on the chat. Usually I'm on from 3 to 4 Eastern. I got on at about 2:30. I first got on at 2 to mention the Fed, said that if I see anything, I'll get back on. I got on right here, right at 2:30. And we saw this. And I said, You wait for it to work off the oversold by getting back above zero. But this is what we talk about wonderful risk reward. I got on live and showed this. I said right here, you short Apple right here. And if you're wrong, you stop yourself there. You're risking 30 cents to make at least $1. It ended up being $1.50. Well, Groundhog Day. You sold off. You worked off the oversold. You got up to this level, right to this zone. And I said it again. If you short here, you stop yourself right above the ATR trailing stop. That one was good for 2 points. That's what I'm saying. All day, maybe you missed this move and this move. There's always something to do when I try to find it for you. If I don't have a good idea, I'm not going to tell you. And, I'm not going to make up something just to make it up. But one of my favorite things is when you can connect the dots. And where could you connect the dots in Apple? You want to have 3 points of reference. There was one of them. There was another little one, but that's pushing it. I'm talking about those little bear flags, and they worked wonderfully. It wasn't just Apple. Google had a bear. The more times you could connect, there you go. This was beautiful. I mean, that's just a beautiful idea in here. Where do these kind of stocks go tomorrow? Well, this is where it happens. Reversal candle, overbought, but it's still over a lot of things. So the key is we have to see on a 1 hour chart how Google, Apple, and so on, how they work them off. As you see, because these aren't 24-hour charts, Google, the hourly didn't get as oversold as the NASDAQ, but the 15 did. See the 15? So the key on something like Google is how it works off this oversold. Is it going to work it off by futzing around in this area? If it does, then it could blast all the way to the strike price, 1100 for expiration. We'll see. That's what I'm going to be watching. Apple, same thing in here. Is Apple, like I said, when I have this pointer I use, which is zoom it, if I have it cued in the wrong place, you get some funky stuff. Right there. Widen this out. Is that a ledge? And that measures about $2.80, well, $3, really about $3.50. Does that go and fill the gap? Or does this just work off the oversold by going to a new high? We don't know yet. I do think those reversal candles are a big deal, but I think it all has to do with bonds. So if tomorrow you see the ZB on the left, if you see this take back everything and rally a point, well, all bets are off. If I'm right that it's on its next leg down, then all these stocks are going to sell off too. And that's what I'm going to be watching carefully in here. I think the easiest thing to do, the easy trade, is this. Forget about trying to time the ES. Go and trade the stocks that get affected the most by high interest rates. We were trading Lennar in here. Did we miss the first move in Lennar? Yeah, but we made the second one. What do I mean by that? I shorted it right here. Bought it right here. Is it only 50 cents? Yeah, but it was on the correct direction. And the interesting thing about the Lennars of the world are this. Go and look at the daily chart. Look at the difference in Lennar versus the ES or the NQ. This is under everything. Cooked down. That's the best risk reward, is taking the stocks that are already in bearish trends. Lennar was a good one because of interest rates. If lumber's going up and interest rates are going up, it's going to hit the housing stock. So if you pick something to short, take the things that already look bad. That was Lennar. How about DHI? This one's even more precarious. If this doesn't hold here, it could go down by that amount. That's a massive move. Don't forget, last October, this was at 38. Well, just do me a favor in DHI. Let me show you something interesting. Where were interest rates? Before you think that's crazy that we could go down that much, where were interest rates in October? Where was the bond market? Right there. Where's the bond market now? Where was lumber in October? Lumber was 390. It's now 526. Why is this stock this high in the first place? That's my point. So just keep in mind where these stocks could go. Go and put up Toll Brothers, another one in here. Why do you think Home Depot went down even though they can buy back their stock? Higher interest rates. People can't use that money, to refinance to do home improvement. That's why Home Depot acted lousy. That's why Lennar and so on. How about Owens Corning? Down $4. Holy cow. How many times did I call that one on there? The idea in there is Owens Corning input costs, and it worked beautifully in there. So I hope all these ideas make sense. Where am I going to go next? I'm still going to watch Tiffany in here. Still forming a bear flag. Tempur-Pedic has earnings tomorrow morning. Big old put action in Tempur-Pedic. We were messing around with it. It was never a huge winner. We made a little money in it in the last hour. You'll see what I'm talking about. On that last blip from here to here. But it wasn't a really good winner. It was a little bit of a winner. But big put activity, we didn't take a shot because they were March options. I didn't want to do it. But I think it'll be a good one to trade tomorrow. Tiffany, Best Buy, Bed Bath & Beyond. I think they're all going to be ones to short on the short side. But let's see how the ES works off its oversold condition. Look at this, and let's go over it real quick. And then I'll let you go here. 4-hour chart. Just when you thought that was a bull flag to the upside because of the NASDAQ, now we're under it. Closed on its high, a 40-point reversal. Watch that tomorrow. NASDAQ. It has to get under that. If it gets under 67.22 and follows the ES to the downside, you know what I think. But we're not there yet. Don't go massively bearish. Everybody was asking right on the close, should I come in short? Should I come in short? I'm like, no, you don't need to come in short. We'll have more than enough chance to do things after the opening. As you see, we're oversold, but we're forming something in here. Just wait till tomorrow. Now, I did a small butterfly in Google. It could come to bite me, but I'm just saying if I want to participate, I was doing it in the cheapest way possible. I'm not going to go and buy NASDAQ puts, even if at a reversal, when you're this oversold. I'll be happy to do it tomorrow. So I hope everybody's enjoyed this video. Have a great night. I'm going to be on tonight at 7 p.m. Eastern for an Ask Me Anything, and I hope you enjoy it. So take care, and I will talk to you later.